Hi, hello everyone. My name is Marcello Kolax. I'm the managing director at Clever Markets, and today I'm just coming to you with a very special video. It's a little bit out of the ordinary. It is unscripted, and I simply want to share with you just one or two things that I've observed over the past couple of months, weeks, years, and now it is happening again. So I want to just share this with you, little nugget, something that I go by. So, what we have in front of us here is the pound dollar. And today we're going to talk about the importance of sometimes just sitting on our hands. Okay, so what was happening? So, this is the daily chart, and this here is the intraday chart, the 15-minute. And we do see that the market has been moving higher consistently since, since quite some time. Since early October, we've been swinging higher within this trend channel. We did break above it. The uptrend accelerated, but then we did have this doji candle, and dojis are hesitation candles. It means that the bulls and the bears, they equally matched. Nobody has a strong opinion. Everyone is just waiting out the situation. So at this point in time, so this was yesterday, by the way, and this is today. The candle is still forming, and we should never do an analysis on a candle that is still forming, right? So, but let's imagine we are still at that point in time. So I'm just moving this along a little bit. There you go, like this, yeah. Here, we're wondering, okay, so we did close above the channel twice, so the uptrend could be accelerating. That's the first idea. But how true is that? So we start looking at, for example, momentum and trend tools. So here I'm looking at the MACD, and we could see that, oh, yeah, okay, so the MACD is on the rise, flattening off a little bit, but that's to be expected with a doji. But overall, the idea is still to be bullish, right? Then we start looking in some shorter term moving averages. We're looking at the 8 and 12 exponential moving averages. They're all looking bullish as well. Yes, okay, a little bit flattening off with this here happening. So usually, so this was just for the broad direction. What usually helps us a little bit more with establishing like the smaller swings with the candles directly, not the broad trends, but like the smaller swings. Yeah, that is oscillators. I like to use in our case the stochastic, and yep. So we did get a bearish crossover, so that is bearish. But sometimes, if you like to be a little bit more careful, you would like to wait until we move below oversold territory. So here's the thing: by textbook, this is the bearish signal. If you want to wait it out, this here it would have been this signal. But here's the thing: we never just trade on a technical signal. We probably wouldn't do that. We actually want to see the market move. And we did see the market move. So here's the thing with technical analysis: we're not trying to predict the markets. We're just trying to see, okay, where are we now, and what price triggers need to be hit. So where does the market need to move for us to know that the market actually is moving higher or lower? Well, in this case, we would say, okay, so if we start closing below the doji, then we would probably have like a little down leg. If we start closing above the doji, then you would have probably an up leg. This line here, by the way, coincides with, with the upper end of the doji. So that was a 61.8% FIB retracement. What is it retracing? This here. So that's the initial down leg, and we are moving higher. And at this point, we have retraced 61.8% of this whole thing here. Okay, so let's zoom in again. So here's like another level of resistance. Usually by textbook, the market only goes to like 61.8% or sometimes like 50% before we move a little bit lower. Yeah. So we do have like, okay, strong resistance. So the idea is we marginally more bearish, but we want to see confirmation, right? That's our idea. And now we do see this is to, and that's also what we wrote in the Clever Markets technical report. Yeah. So we always, every single day, have these directional arrows. Okay. Now everything is a little bit out of whack because I've been zooming in and out. Okay. Okay. Can't make it pretty right now. But the idea is that we always put on the most important support and resistance levels because we want to know where the market needs to break through in order to go to the next level. Yeah. And then we do have our directional arrows. And today in our Clever Markets report, we did write for pound and dollar that, yep, near term is still bullish, but intraday neutral. So you can see we analyzed the 15-minute, the daily chart, and the weekly chart. we always do have a little bit of a summary here, our weekly video. So if you're following me, watching the videos, we actually do have like a 1 hour video every week. And then, of course, I click to the pound dollar. We can click through the daily and weekly chart. And on the daily chart, essentially, we did write exactly that. We write, we don't know. Yeah. So the market is at a turning point with no preferred direction. And then if what we then did is essentially we spelled out two scenarios, and these are exactly here. Yeah. So a break below 1.2662 would mean that we are probably heading lower, which is our kind of preferred direction. And if conversely we break above this area here, then we'll probably see like unrestricted gains. And now the market is actually moving lower. So what I want to show you with this is that with TA in general, we are not trying to be like right all the time. Yeah. Sometimes we're just waiting it out. So you understand there's a difference between analyzing the markets and trading. So in this case, I'm just analyzing it for the clients, right? So I don't have any skin in the game, but it is important for everyone to know, like, okay, when do we know that the market is more likely to move lower? And we have a very clear trigger. This here, by the way, is a target 1.2505. Why? Because that used to be like an old resistance. Yeah, that was then hit and now it could turn into support. Another thing, now the video is getting too long. Another thing would be putting on some FIB retracements and seeing if anything aligns with here. So it's a little bit messy now. But you can see, like, if we move below 23.6, yeah, which today could be the case, then you could make it to 38.2, to 50, to 61. You can see the maximum extent of a correction usually is like 61.8, which coincides with the lower channel boundary. So it means that essentially maybe we're just seeing like here, just boom, yeah, higher, boom, lower before we then continue higher. Why do I think that we will continue higher after this? Well, because the momentum overall for now is still bullish. Of course, we have to reassess the situation when we are there, but with the evidence available to us, should move higher. So, in summary, sometimes it's good. It's good to wait it out. Yeah, have clear boundaries, especially when you start the day. Yeah, do you want to go bullish if we move above this level? Do you want to go bearish if you move below that level? Have a target. That's very important, and also know when you are wrong. All right, that is it. That's all I want to share today. That was just a little snippet. I hope you enjoy that. Thank you very much, and bye bye.